But first, we begin with this wild week on Wall Street. After a period of calm, the Dow Jones Industrial Average entered a phase, well, let's just call it extreme volatility. The Dow swinging more than 500 points top to bottom every single day this week. In fact, we've now seen that for 6 trading sessions in a row, and this is the first time that's occurred since October of 2008. And you remember what happened back then. Well, for now, major averages rallied today into the close, and for the most part, they all ended the week lower. Joining me now to help break it all down, Lindsey Bell, CFRA Research investment strategist, Paul Dietrich, Fairfax Global Cap Markets CEO, and Ross Gerber, investment advisor at Gerber Kawasaki CEO. Lindsey, let me start with you. Your overall feel for how this market traded this week, but more specifically, how it traded today, and as a market strategist, how investors should be prepared for the next week or so.
Sure. I mean, it has been a wild week, right? But today, what was interesting is it felt good to end in the green on today. We saw specifically today a lot of selling all week, really. The sellers were outpacing the buyers. But at the end of today, J.P. Morgan Asset Management, they released a memo saying that the forced selling by these systematic traders that were related to those short volatility trades that kind of have been blamed for some of the wild swings this week, they're saying that some of the selling related to that to cover their margins was over, and you saw the market start to move higher. We don't know. We'll see what happens next week. But this is a time for investors to really be disciplined. This could be an opportunity. Volatility returning to the market creates opportunity for investors. There's
no doubt about that. But, Paul, what we also saw was major money, $24 billion coming out of the market, out of these funds, after a record amount of money came gushing in January. Many people believe those two numbers are some of the same investors. So despite the fact that we've got history on our side, and by the way, one hell of an economy on our side, people are panicking.
Well, I get calls every day from reporters asking to explain this crazy stock market. And I keep telling them this is the sanest and most rational I've seen this market in 2 years. I mean, we've all complained that the stock market was overvalued, and the stock market is now doing what stock markets always eventually do. It's reverting to mean. It's going back to fair market value. And we should all be happy about that. I mean, last week before the market started to tank, FactSet estimated that the market was overvalued by 11 or 12% based on their forward PE calculations. Yesterday, we were down 10%. We went up 1 1/3%. Today, we're still 2 or 3% away from fair market value.
But what I don't get, though, Paul, is why do we have to trade at fair market value right now? I mean, what's so big about that, particularly if the economy is on a cusp of, going places we haven't seen it go in a long time? Employment's going to places we haven't seen in a long time. Wages are starting to grow. And by the way, for what it's worth, now the PE ratio, the forward PE ratio is down to its 5-year average.
Yeah, this is like the day follows night. There are hundreds of academic studies that show that when a trend gets out of whack, it reverts to the mean, and that's what it's doing. And we should all be pleased with that. I mean, you're right. We have a spectacular economy with spectacular fundamentals. We have a global expansion. Corporations are in great shape. FactSet is predicting that we're going to see 18% earnings growth this year in the S&P, partially because of that tax cut legislation. And yesterday, the Atlanta Feds is predicting that the first quarter of this year, we're going to see 5.4% GDP growth.
Ross, let me ask you, because one of the things that's been totally lost in all of this is that we're in the midst of one of the best earnings seasons ever. 79% of companies have beat. If it stays at that rate, that would be an all-time record. Blended sales up 8%, earnings up 74% of them have beat, blended earnings up 14%. This is boffo stuff. This is the stuff that normally would be rocket fuel for markets.
And it should be rocket fuel for markets, but something broke this week, Charles. I'm a real trader out there trading every day with hundreds of millions of dollars, and I can tell you our orders aren't filling. So we're seeing just swamping of the systems with sell orders, and it seems like a coordinated effort either by shorts or institutions that are hedge funds or such, where they're swamping the system with sells, but then us buyers aren't able to get our orders in. We've seen this across all the firms all week long. So something is kind of wacky in here, too. So I agree with the guess that this correction is well needed. We need to get a little bit of the froth off the market, and now we see values that we can buy. But there's something wrong in here. So I caution investors, please, don't let this volatility affect your overall sense of what's right or wrong, because you're absolutely right, Charles. This is the absolute best economy I have seen, maybe in my life, but possibly since the 90s. And so, to get out of the market now, I think, is very, very foolish.
Lindsey, of course, during the course of the last 6 trading days, we've heard complaints about the dollar being low, about yields being too high, about volatility, the VIX coming back, fear, just about almost everything. And then, of course, there are the machines which have taken over and run amok. Is it a combination of all of those things, or could there be something out there that no one's pinpointing just yet?
I think there's a lot of things happening that's driving this market lower and driving these wild swings, and you named a handful of them. My biggest concern as I look out is really the budget deficit in the federal government, that ballooning out, the Fed unwinding the balance sheet. We have no idea how that's going to transition, and this is going to be a bumpy ride, moving from monetary policy to fiscal policy, tax reform, higher growth. So
now, let's not forget, though, to your point, though, this is the same Fed that complained bitterly, well, as much as a Fed can complain, about the fact that monetary policy, i.e. the Fed, was doing all the heavy lifting during the Obama administration, and there was no fiscal help, right? There was nothing there except perhaps roadblocks. Now you have a pro-growth, pro-business White House. They've gotten rid of a bunch of regulations. They're lowering taxes. What position does that put the Fed in? Because all of a sudden, people are saying Jay Powell may be a hawk. I don't know where that comes from.
You know what? The Fed's going to have to be very, very careful with interest rates. You saw the move in the 10-year from the start of the year to where we're at now. I have to say, though, the 10-year hasn't moved that much over the last couple of days. And going back to what your last guest was talking about, not seeing the buyers in the market, you also didn't see gold move higher. You didn't really see bonds start to move higher as the stock market was selling off, which tells me that how fearful is the market? There's something else going on, because investors aren't going to these safe havens that they normally go to when the stock market sells off.
All right, so Paul, you've described this idyllic situation, okay, and how we should be thrilled about it. How does it play out over the next couple of weeks? People watching, I would say the majority of people who've called me want to buy right now. So maybe the American public has looked at the stock market in over the last couple of decades, and determined these are opportunities. How do they go about it?
I think you're absolutely right. I think we're going to see, with all the things I mentioned earlier, we're going to see double-digit gains in the stock market from the beginning of the year to the end of the year. I also think all this inflation, we are going to see some inflation, but it's overhyped, and I think the Federal Reserve is going to keep the same 3 raises of 25 basis points during this year, and that's right. But one of the things that when people are talking about trillion-dollar deficits. Under the Obama administration, he racked up $9 trillion in deficits over 8 years, and we got zip inflation.
Yeah, we did
Nothing
okay.
Inflation. They're talking about a trillion.
But we do have to, at $20 trillion, at some point, paying the interest alone is going to be $1 trillion a year, and that could build a whole lot of schools.